good afternoon, good evening, depending on whichever part of the world you are in. It's a pleasure to have you with us here. A very interesting conversation we are out to have with some of the industry leaders. And the topic is as fascinating as it can be on what we actually are finding very interestingly. It's a changing topic every day, and there is a lot of discussion around buy now and pay later, which is why what we have today is a discussion around BNPL 2.0, where we are looking to drive how do you leverage technology to drive what's a superlative experience while we mitigate risk and maximizing revenue. This webinar is being hosted by IBS Intelligence in partnership with Intellect Design Arena. Let me not take much time to quickly introduce the team here. The panel with me, we have with us Harpreet. Harpreet Singh is the business head for lending and retail payment products at IDA. Harpreet is a veteran in the payments and lending space. He's been there for more than 2 decades. More importantly, he has been a banker, a city banker, and also with a leading bank in the Middle East. So Harpreet, looking forward to a very interesting discussion with you today.
Certainly. Thanks, Ram. And I am looking forward to a very good discussion with the panel.
Thank you.
Thank you.
We also have with us Sebastian Green. He is CIO at Resurs Bank in Sweden. But more importantly, Sebastian is a guru on BNPL, not just because he's a banker, but he started his career way back in the early 90s with IKEA. And every single conversation that we have with Sebastian is power-packed with a lot of passion around how BNPL has evolved over the years. So Sebastian, I guess we're going to have some very fascinating inputs from you today.
Absolutely. Thank you very much for letting me be in this. I'm looking forward to it a lot, and hopefully we can have very interesting discussions further on. So, IKEA is the company that can make gold out of wood. So we'll see how we can take that further on.
So that's a good one, Sebastian. I am also joined here by someone who's actually been at innovation for many, many years. Tomasz Motyl is a CIO at Aion Bank. As many of us know, it's a full-service digital bank based in Belgium. It's moved from being an old bank with a digital subscription model, and more importantly, Tomasz has been also held positions as Chief Innovation Officer earlier with the Innovation Lab at Alior Bank. I guess a very long stint in the banking industry, but a lot of them have been changing with the digital world. And here we have Tomasz to share with us some perspectives that we are very keen to hear. Tomasz?
So thank you very much for the invitation. I hope I know, as I mentioned, was mentioned already by Sebastian, we have a very interesting discussion. Now the BNPL, as I said, the segment is changing dramatically or in each places, and especially when you want to discuss about, say, how the digital world is changing and how we want to deliver, not only for the retail client, but also to the SME client as well.
Absolutely. Absolutely. Thank you, Tomasz. Very, very warm welcome to all the panelists here. With the panelists is your moderator, yours truly. I'm a senior partner at Cedar. Cedar is the parent firm of IBS Intelligence, our independent research unit focusing on banking and technology, financial technology. I personally been in the space, particularly focusing on banking technology and innovation for 27 years, and looking forward to a very engaged conversation. We do want to keep the audience not too far away from the discussion. So if I may also dare say that we will be actually engaging with you, my fellow participants in the audience today. The format we would be following today is we'll start with, what would be a panel discussion followed by a small presentation that we will have from Harpreet, post which we would be opening up for questions from the audience. But while the audience may actually pose the questions towards the end, you are more than welcome to actually have them posted in the Q&A section that you would find on the screen, on the bottom of your screen on the right. But let me also mention here that you are not only required to be asking questions, you're also required to answer a few questions. How does that sound? So here we are with a first poll of the day that we will be posing to our friends in the audience here. I am getting this launched, and the panelists are also allowed to vote, and they are seeing it for the first time as well. And Harpreet, are you able to see the screen with the question?
Yes, sir. Yes.
Excellent.
Yes.
So here we are with the first question to the audience and the panelists on BNPL. But before we jump into the BNPL, the question is, what's the most important innovation that you think would impact the future of payments? Is it the contactless cards? Is it the pass-through digital wallets, which is obviously a proxy for real cards? Is it the value-added services driven by, the likes of BNPL? Or is it the development of what we call as super apps? We are 37 seconds into the question, and we have another 27, 26, 25 seconds to go. But what's interesting here is, as I'm seeing the poll results, I could see it seems to be a very tough tie between these questions. And I guess it will also set the tone for what we're going to discuss later in the day. Closing the poll, let me end the poll and publish the results. I assume you can see the results there, Harpreet?
Yes, we can. Yeah.
Okay. Looks like BNPL is a very close second to digital wallets. And I guess that sets the tone again. I could see Sebastian grinning there. So we would actually be jumping into that discussion very shortly there, Sebastian and Tomasz. But thank you again, audience, for sharing your views on that. So why don't I start the discussion? Maybe we're talking about digital wallets and we're talking about BNPL. I mean, just some statistics to start with. The credit card usage has dropped from what was about 64% of the people who have a credit card, from a 64% in 2002 to almost 36% in 2020, right? While we have obviously seen digital lending growing at about 24%, it just goes to say how the numbers are significantly skewed towards what we are seeing with BNPL, and almost 4% of all the spend that is made in UK, for example, 4 out of every 100 pounds that are spent are using BNPL. So that's some interesting starting point and statistics for us to actually mull over. So why don't I start with you, Sebastian? I mean, this discussion we are having actually has two different connotations. One is about the evolution of what we see as non-cash transactions, and secondly, about how we see BNPL as a strong alternative payments method. Your take.
I must say, very interesting to see the answers to the questions as number one, and very interesting questions. I think that the big thing here is that BNPL as is, I see that more as a concept instead of seeing it as a technology that should be replacing something else. And I think that it's when we as bankers, when we have the possibility to form that concept, fitting our market, fitting our customers, then we can create value for our customers, and also creating value in the customer journey. And when I say customers, I mean both partners, and I also mean our consumers, so to say. So both sides, because as we are thinking mostly is that BNPL, if we see that as a concept, we can always dress that concept with different type of technologies. And I think that the most important thing is that you add correct technology, you find a base, a good base, keep tracks of the different transactions, and then you can add the different type of technologies that you would like to have. The market is challenging the traditional way of paying with cards. Mostly, I should say, because that it is like the checks, a little bit unmodern, fitting the way of how partners and consumers would like to pay in future. And what BNPL creates, as I see it, is that it creates a way of choosing how you would like to pay your things and how you would like to spread the different things that you're buying. It has nothing to do with that you would like to, let's say, set a consumer in high depth. It's about how you would like to pay and how you would like to spread it over time. So I think that's the most important thing, that it comes from two different angles, both the partner, as you're creating a way of how you can sell your products in a good way, to create possibilities to dividing down payments. The other way is, of course, how the consumer has the possibility to choose how they would like to pay. And I think that the future consumers, they will be unfaithful to much more. You're not stuck to a brand. You're not stuck to something that you have done traditionally over time. You are unfaithful. You're choosing what fits you at the stage and time where you are in life. And life happens, which means that you have to do multiple choices. I think that is very important for us to bring into the concept.
That's a very powerful statement you just made there, Sebastian. Future customers are likely to be more unfaithful. I guess that's the quote of the day so far already, and that I guess I'm going to take that part of that statement to Tomasz. You're dealing, Tomasz, with with so-called digital banking customers who supposedly have has a higher appetite with quote unquote millennials, or that's exactly at least what the perception is. So Tomasz, I mean, if I was to pose this question to you, do you see the alternative payments being focused primarily on the millennials, or do you see this shift is actually across all the age groups?
Well, for sure, it's not just for the millennials. No, this is the last year is just changing so dramatically. All these things were now based on our say data, and the data which coming from the different players on the market is showing us that the change was done for everybody. So we cannot just say that it's only for millennials. Now it's done for everyone. What's important for me that that was this poll just presented to us, that the first wave was started by the wallets, and the wallets does give us the first the trigger to change a lot of different things. And buy now, pay later, it's just another possibility how we want on top of that to create something add value for the clients. Like Sebastian mentioned, we need to propose something as a choice for the clients, what they really want to have. If they are short in the money, can you just make the installment or maybe just pay later? It will be enough for them. And this kind of the choices we also having digital world need to, let's say, attach to the way how the people want to serve by us. So maybe for some of them using the app, we see that they prefer using this type of the method of the payment, for the others the other one. Because if you want just listed let's say the 1,000 of the things for the clients, that's just the mess. So we also need to accommodate what kind of the things, which kind of the segment, group, country, and so on and so forth to fit the best. Because even the number of the transactions of the plastic cards decrease, but on the same time, the number of transactions made by the fully electronic increase by 10, say, from that perspective. So we need to find a way how to make this proper choice, in facing the client, what to offer them in particular case, even the buy now, pay later will be the best, or just saying, no, let's just leave it as it is, and maybe later think about that maybe we want to split something. So it's another way how we want to do it, not only by the merchant, but also, like mentioned by Sebastian, by partners and the client at the same time, because we as the bank or the fintech, we are in the middle. So we are making the proxy between the two different worlds, and we need to find the best bridge between these two components.
Find the best bridge between the two components. And we are talking about building the ecosystem here, and we're talking about BNPL as a concept that is being adopted. One could clearly see there has been a huge, upsurge in the European market. We're seeing Klarna, and we're seeing 8 million downloads, if I'm not wrong, in 2020 alone on the BNPL platform of Klarna. I would like Harpreet to come in here, and you obviously, you've been, looking at BNPL around the world, Harpreet, and you obviously been talking to customers, right from the West Coast to the East Coast around the world. What do you see as the evolving trend? I mean, is this a UK European trend primarily at this point, or are you seeing this being adopted around the world? How do you see the comparison between various parts of the world in this journey?
very interesting question. Deserves a much longer answer than I can afford. So, but I'll give it a shot. Right. And this has its roots in the previous question that you asked, Thomas. Right. I mean, so while the BNPL trend now is cutting across ages, it was started off, or rather, it was given the fillip by the millennials, right? Because they were the first ones. They were the early adopters to this trend, right? That's part one. Part two is, like I was chatting with the panelists before we started, right? It's also driven largely by the discretionary nature of the spends, right? We have started off from there. Now, as Thomas rightfully mentioned, it's being taken up by all age groups, and the spends are now moving towards necessary, the kind of spends we call the necessary spends, like healthcare, for example, like travel, for example, right? So they're going to be the next in line to follow BNPL. Getting to the point of the geographic spread, what we observed was the initial trends in Europe were far ahead of the rest of the curve, right? So Europe was the first one to kind of move onto the bandwagon. We could also see some trends happening in Australia, for example, cutting across the region. But Europe was clearly by far ahead of the curve, right? I see a similar and a very well-established pattern coming up in Middle East, right, which is following up very closely in terms of the kind of spread BNPL is doing there, and also in India, right? I mean, India has been slightly late to initiate, but now I guess is very well spread. The other thing that I would like to mention here is BNPL has got various types, right? I mean, you have these pay in 4 installments as the simplified version. Then you can get into details like, the sectoral, for example, BNPL, which is the suppliers from a healthcare, they can only finance, right? I mean, so you can have on the card transaction, off the card, post transactions, embedded post transactions, all these various forms are there. In Europe, I see all 4 or 5 of these forms happening at the same time by the same players, right? And if I may answer on behalf of both Thomas and Sebastian, I see I see their entities kind of getting into details of all the forms of BNPL. In India, on the other hand, I see the trend which is more towards the simplified BNPL loans, which is on the card and the split in 4, right? I mean, walk to the cashier, split your transaction in 4, or pay later. These are the simple form. So I would say early adopters, Europe for sure. More depth, Europe for sure, right? But watch the space. When we talk of Middle East, when we talk of India, you watch the space for more is what the way I see the market.
But that's a very interesting answer. Thanks for that, Harpreet. And I probably will pose another question back to you here, right? You talked about these various options, this is, pay in 4 or cards based installments, or it's actually a question really is, if you had to put yourself in the shoes of a BNPL player, right? What's the right approach? Should one actually be a pioneer and actually be building on one of these models and actually make that as your showpiece? Or should one actually be having be a one-stop shop with all types of models and actually offer that? I mean, if you are a BNPL player, what would you do?
Yeah, so I'll possibly take some help from Tomasz here, because his previous answer was actually a precursor to this. So it depends on the model that you would want to follow, right? It depends on the strategy that you want to follow, right? If you want to be mass player, you're having a retail agnostic or a merchant agnostic model that you want to follow and target the customer directly. The simple one is via the card, pay in 4. I mean, you are not tied up with a strong backend, with a strong merchant backend, right? On the other hand, something very close to what Sebastian is trying to implement is the model where you bring other players of the ecosystem in play, right? Which has a strategy where you have a very, very well-defined merchant strategy. You have a very well-defined how would you and what would you do from a merchant perspective? How will you enable the merchant to kind of have BNPL solutions at their, and mind you, all form factors, right? I mean, I'm not limiting to a particular form factor. It is not only a lending solution, it is also a card solution. It might be a mix and match of both, right? It might be a revolve line on the card, revolve line off the card, depending on, you know, how are you tracking the customer, right? And so therefore, so I'm saying, you know, depending on the strategy you want to follow and depending on what are the resources you have at your disposal, right? And what's the appetite in terms of growth that you're carrying, right? I think all three will be important. The factors are important. Also keep in mind that we are right now at the stage where we've seen the early growth trends come in from a BNPL perspective. We are yet to see the full risk impact, right? I mean,
I'll get to that in a while, right?
Yeah, sure.
But before I get to the risk part, I still want to stay on the BNPL players' shoes, and I actually want to invite Sebastian into this, right? I mean, he's obviously been there, done it. You know, you obviously see this from your own perspective. So, you know, if you were to actually, you know, share with our audience here, Sebastian, what could actually be the kind of challenges that the BNPL player faces, right? And obviously what benefits one draws in the way one has actually been structured, right? I mean, you know, just a view from a BNPL player's prism, right? You know, what would your take be?
I think Harpreet, he explains it very well in terms of that you need to choose what type of player you would like to be. If we see on the big banks, so to say, the more traditional banks within Scandinavia, for example, they have chosen to create a bank within the bank for handling what they're doing because they don't want to mix these different things. So we can see that on the Swedish market and also on the Nordic market, that you create a sibling company which takes care of the partner and also the consumer. But to answer your question, Rob, I think that the most important thing is that for being a good BNPL partner is to be able to create value for the partner, and I will explain very soon how, but also get the know-how of the consumer or find out the needs that is necessary. Because if we look at what we have done traditionally over 30 years back, is that we have created a product connected for a merchant. Somehow you would like to buy a TV or you would like to buy a sofa, and then you run that as a product, and then we finance that to the retailer over time. And then the consumer, he buys that somehow. So we can say we have a down payment on 6 months, 10 months, 12 months or whatever, and there is a fee that is connected to that. But today, the consumer, for adding value, is more that the merchants today, that they would like to have a solution where they can sell their products. They don't really care about how BNPL, as we see it today, how it's working. It's more like the consumer. They would like to choose by themselves. Tomasz, he said it very good, because it's about, I would like to choose that this part of my transaction, I would like to have a BNPL on. But the other one, I would like to pay directly. And then I would like to choose if it should be, initially, I would like to have 4 months. But when the 3rd month comes, I need to change the tires of my car as well. And then I do a new BNPL, and then I extract it to 6 months instead. But still, we as a player, we produce the tools to keep track on your financial status all the time, which means that we expand and shrink the possibility of the total limit that you have, which means that it creates control for the consumer, and it also creates a way of how the partner can make business. So we are, instead of being a vertical player, we suddenly are saying, okay, we will give the consumer the possibilities to affect how the BNPL should work, instead of traditionally saying, buy this TV, pay it in 10 months. And you only do this, you only do that transaction. Instead saying, you can do this limit you can shop whatever you would like to do, and then you have like a rubber band that you can expand and shrink it over time. So that is how I see that the BNPL in the future, how it affects the retailer. The one that they would like to cope with is the players that has the most possibilities for the consumer. Then they will be connected. And it will not be, as I see in the future, as it is today, that one retailer has one bank or one niche player that they are working with. They will work with whomever, because the consumer will bring in the player that they would like to do business with. So we have a new situation in the market, and I think connecting to what I said, that the consumer becomes more unfaithful. Multiple choices, of course, that's what we want in the future.
The consumer will bring your partner. I mean, Tomasz, I'm going to shift this question to you. Sebastian comes with these, punch lines here, which are like so powerful.
I shouldn't say that. Sorry.
No, I guess that's a very powerful and a very valid statement, right, Tomasz? I mean, talking about ecosystem, it's not that you got to go seeking out. Your customer brings it for you, and unless you actually are plugged into the ecosystem, you become obsolete. I mean, your take, Tomasz. I mean, how does the interaction of the banks and payment providers with the ecosystem become so critical in the for a effective BNPL proposition?
This is the tricky one, because everybody has the different puzzles. Now we are the banks, so the fintechs. Now different risks needs to be taken by these both players because of the regulation and this kind of the stuff. But on the same time, there was mentioned by Harpreet, but no, we just started with the things which are just the necessary for the clients. It's a small amounts, not too much, and so on and so forth. But this is what we did. The biggest challenge for us is how we want to tackle these bigger tickets. Let's call that way. So about 1,000 to the 5,000 to the 10,000 even. How we want to deal with that, especially nowadays when especially the small and medium enterprises have some kind of the issue how we want to collect them for as an example, the Horeca business, or this type of the things to make on this weekly purchasing, which is needed to be done for the restaurant or things like that. Now, knowing all this COVID situation, how we will deal with this risk and how we put the proper puzzles. So for me, the question now is coming, how we want to measure the proper level of the client limits, on the same time having the proper IT tools which can combine together and scale up. This is what everybody talking about, the go to the cloud, to be fully cloud native and so on and so forth. Making this API basis as our fundamentals, because as you mentioned, it's not one player anymore, it's going to be multi-players. So you have to be easily switch between the players using the API open banking connectivity, even saying the big words like this one. And this is the way how you need to navigate, because it's not just the one direction. It's not that these things are changing so quickly that you have to adopt very, very fast. So it's not just the magic word agile, which is coming here, but the way how you already construct your fundamental architecture. Is not the way how you are working with your squads and so on and so forth, but how your architecture and operational, engine is ready to make these things happen. Because maybe, today I can say, I want to focus on this segment, on this sector, because I see this my business there. But then a quarter later, you see that this already covered. So you need to find another way, because you need to create this snowball effect to make the bigger market. Because you cannot be just a player for the niche itself. You have to figure, big thing from that perspective, because in that case, you can create the proper portfolio of the product and spread this risk and to cover all the costs which are behind it.
But I want to still ask you, you made a very interesting comment about having the right tools and technology tools. You talked about the APIs and cloud and analytics, and we also talked about managing the customer risk. I'll come to the risk part in a little while. But I do want to ask you, Tomasz, and you obviously have been, a technology person driving a lot of, adoption of these technology and tools. How does one make sure that you have selected the right technology? What's the secret sauce that technologists who are in the audience today should know in making the right choice?
You never know if you make the right choice. This is for sure. This is but you need to be prepared how to make the change. So this is, I think, the fundamental stuff for there, because it's better to make the choice and then to change something than just to think over the months or quarters or even the years like it was in the past about think about the different what if scenario, because it's not the case anymore now. So if you want to be sure that you are quite easy to change your architecture or to your partners to make the best of breed solution, you need to have this API gateway. Without this API gateway, which the best, if it could be in the cloud, because they do the scale and the straight ahead connectivity. No, this is the way how I see this, that no, the choices can be changed over the time, or you even have a several choices for the same manner, and to offer the different set of the product. So the secret sauce is not the make the right choice, but to make the process itself designed in that way that the choices can be easily changed if something happens.
Fail fast as they say.
Ramkur, I shouldn't add anything, because if the audience should remember anything, remember what Tomasz said right now, because this is exactly the problem of the challenge of a CIO within not only a bank, within any type of companies at the moment. And CIO is center of information. It should be center of innovation instead, because you need to be very innovative the whole time to be able to change. And I think Tomasz says it's very, very important. It's very important. Remember what he says, because it is technology that will make it possible. Not now we're speaking about BNPL. That is what's going to make that concept change. So it's really, really important that set up the technology, use the technology, because that is the driver for being able to address the concept that you're.
How does one use, Sebastian? I still want to take your thoughts on the use of the technology stack and leveraging the ecosystem from a risk reduction standpoint, right? We talked about adopting tools, and I still want to go back to the risk part, which obviously has been mentioned before. How does one leverage the ecosystem, and how does one successfully or well use the technology stack in order to minimize the risk? I mean, is there anything that you would like to share with the audience here?
First of all, I mean, we are using the technology from two different perspectives. One, which we call the full flow and the simplified flow. The simplified flow is more a way of sharing, as Tomasz says, our API stack by making it possible for us to white label our products that we have, which means that a simplified flow for us is more that we are the guys that keeps track of the transaction and everything, but we never occur as a bank together with our partners. The other one is that we occur. Then we are like a plug in the wall, which means that we take care of much more. So what we have created is more is closely, very close to what Tomasz is saying, open API technology platform, which creates integration fast for us, both from our partner sides, because we need to integrate with a lot of partners, and except from that, we also need to integrate with a lot of partners, which is, let's say, services on the market, but also with a lot of retailers. So it's two different type of bases that we're working with. And the faster we can be, and the more structured we can be, then we can take enough responsibility. And what I mean with that, we're taking enough of responsibility, then we can explain easily for our partners, our retailers, you should do like this, you should work like this, you have these two different type of solutions to choose from. Our responsibility goes to this extent. On the other side, we do the same thing. If, for example, if a fintech occurs on the market, they would like to sell their products through us, then we do the same thing. But clear cuts where it can never be fussy where the different type of responsibility should occur. So what we provide is a solid ground, a solid technology of how the structure should be, with a lifecycle management connected to that, which means it can never be, let's say, what happened, something happened. And it's the same thing. It's an agreement that you have to sign with us if you're going to partner with us, no matter which type of areas we are. And that has risk eliminated us and also created speed and created an ecosystem for us, which means that we can sell our product together with other people as well.
I want to go back to you, Harpreet, and I think you started to make a reference to risk from another context altogether, right? I mean, 1 in every 10 BNPL customers are supposedly being chased for payments, right? So we're talking about this whole credit risk that we are seeing not only with customers, but there is also the concern that the quote unquote BNPL fintechs may actually have a merchant default risk, right? Your thoughts?
Yeah. That's I guess the risk is the other side of reward, right? I mean, so right now we've kind of seen the rewards, right? I mean, the risk is this coming up shortly, right? I mean, and my fear is that when it does come up in full blown fashion, it will be a big risk, right? So because let's try and understand what most of the BNPL loans, if you may, or the BNPL offers that are going, is also coming or attracting the segment which might be at the edges of subprime, to slightly upwards, right? So the tendency to flip over onto a bad loan will be very high, and the default rates therefore subsequently will be higher. On the other hand, the margins, which for a credit card, for example, the equivalent of this you see in credit cards, but on the card side, the margins are very high, right? I mean, you have the appetite to absorb any form of credit losses that you kind of foresee. On BNPL, since there's no NERF, right? I mean, there's no net interest income, right? You will struggle to meet, a high delinquency. So that's one on the customer side. So therefore, I mean, that's the risk. What do we need to do from a platform perspective? Where various things like is your origination system solid enough to kind of onboard the customers that you are venturing after? Is the credit decisioning happening in the correct fashion? Are you knowing your customer, right? I mean, is the KYC happening on the spot? If it is happening on the spot, is it happening in the right fashion? Is your income estimation a robust module? What is the decision that you're taking at the time of sourcing the customer? Should the customer be given the amount that you want to give, right? I mean, all those factors are coming into the picture now. So that's on the customer side. On the other hand, you also have an equivalent risk which is residing on the merchant side, right? From a merchant perspective, what attracts BNPL to most merchants is the fact that specifically during the pandemic times, they have been able to clear off their stocks much faster, right? That's at the gist of what they are, what they have in stake in BNPL, right? You have goods lying at your store and you want that to clear off fast, right? So therefore, at any point of time, this cycle gets broken. Your entire cycle of goods going out of the store, it getting purchased, that gets broken either due to a customer default or the customers stop coming to the store, or the merchant has a problem in terms of its own cash flows, right? If any of these things happen, you have a break there. So and because of that, the finance that has already been given out as part of BNPL in terms of unfulfilled transactions, they will again pose a bigger risk to BNPL players, right? So
the strength of the chain is equal to the strength of its weakest link.
Yeah, I guess so. And that's where therefore I envisage BNPL model to only move to not only take care of the customer alone, but also to get the third. So I call it the triangle of operations, right? You have the customer at the apex, you have the bank or the FI or the BNPL service provider, right? On the others, on the second part of the triangle. The third one is the merchant, right? And unfortunately, the third angle is something which is not being spoken very about in great detail. I think it's time to focus on the third, chink.
Maybe on that note, I'm going to actually go back to our audience and actually ask them what they think about the third pillar you talked about, Harpreet, and then we'll obviously jump into a small presentation that Harpreet will make. But here is a question for the audience. Which of the following statements best reflect your view on the adoption of B2B in the BNPL context? Do we see the BNPL? Sorry, you could see my screen, right, Harpreet?
Yeah, yes, we can.
The BNPL players will remain focused on retail customer acquisition. You see them to be focusing towards merchants as a primary focus. You actually see them to be focusing merchants with primary focus on servicing versus financing, or both, right? So you have a view on this, and if I can dare ask you, Harpreet, I know you also answered a poll, but I'm just curious, what did you poll on?
And again, this is something we tried to address in an earlier question in terms of the strategy you want to play, right? I mean, if I can think on behalf of both the CIOs we have here, right? I mean, and what I could gather from what they said, one of the fundamental pillars would be to expand or to expand the type of loans or lending that you're doing, right? I mean, right now, focusing on customers, therefore do that well. That's one part of the entire program, right? When you're talking to the merchant, that brings not only the fact that you're trying to protect your risk or mitigate your risk, but also a good financing option, right? I mean, you get into merchant financing, you're opening up a new and different form of SME lending there, right? I mean, so that's a new, whether it's going to inventory finance or merchant finance from an unsecured perspective, right? You can have various models there, right? So as long as you are able to tap that into the picture, you can have, I think my answer would be D, but a very important one is C, which is the merchant servicing piece. So I guess I expect it to be a split vote, but I would be happy.
Well, it is. So let me publish the results here. The good news is 80% of the audience who polled believe that BNPL won't be only focusing on retail customers, but will actually have the shift of focus. So that's one good news out there. But and the second good news, if I may, is almost half the people who have voted seem to believe that it is going to be a focus both for servicing and for financing. So option D, as you said, followed by option C again, as you rightly pointed out. Yeah. So appears that you have the pulse of the audience, Harpreet.
Yeah, we were dead wrong on the question number 1. So good to kind of know that question number 2, we are all good. So
all right. So on that note, why don't I invite you, Harpreet, if you would like to share with us about your.
Yeah. So, and how much? I guess I'm also running out of time a little, right?
I guess we have about 5 to 10 minutes, and then we can open up for audience questions.
Sure. If I can, therefore, get into it. So, I've just done the presentation mode. I hope you can see my screen.
Yes, we can. Yes.
Yeah, great. So first of all, thank you for this platform. What I'm going to talk about is as part of BNPL 2.0, right? I mean, we spoke about BNPL, as a customer offering, and therefore, what is different that we envisage in BNPL 2.0? Very, very prophetically, the audience kind of answered that by the second question that we posed to them. And that is where I see a shift, when you're talking of 2.0. And as part of that, before I kind of move to that shift, let me share with you something that we saw in the market when in the last year and a half, couple of years that we've been observing, which we call the new culture of credit, right? I mean, we are moving away from the nomenclature of lending as a product. And therefore, I'll be shifting to the platform concept that I call the credit platform. So a few things that we kind of picked up, operational efficiency, which therefore eliminating all the friction that is there in the credit processes. You harness fintech sources for data. Most of the players that you are kind of engaging with need to have a good amount of interoperability, whether they are internal systems or external. And very importantly, thinking beyond lending, right? I mean, lending, the traditional form which Sebastian referred to, right? We are not talking of those as products now anymore, right? Because they will not be able to service. And here I'll just give you a 30 seconds on one of the examples that I think Sebastian was trying to quote, which is, breaking a transaction into 4 equal installments is one part of the game, which can be done by any lending system. But if you were to get into many more complicated transactions, things like, you part pay for something that you are gonna get a delivery of only 10 days from now, right? And that, both from a merchant invoice perspective, both from a partner settlement perspective, as well as the payment perspective, right? Can your credit platform address all 3? Part payments to start with, and then whatever remainder you have to pay has to be broken up into installments, right? There might be another complication where the part payment that you're doing, you're unable to pay right now. You want that also to be broken up. So your invoices have to be changed, reconfigured, right? All has to be done, simultaneously, all has to be done seamlessly, right? So therefore, again, coming back to thinking beyond the lending solution, we are talking of a platform that can offer all forms of credit, right? Scalable, and we spoke about APIs at length, right? I mean, that's where the future proofing of technology happens, right? And before I come to user experience, let me also talk about cloud, right? I mean, all this needs to happen on the cloud, both from a cost perspective, from a risk, security of data perspective, right? Cloud is no longer something good to do. It's a necessity, right? From user experience, and we call it GAFAN or FANG, I guess the F is now changed to M. So, Google, Apple, M, Meta instead of Facebook, right? Your Netflix, etc. Again, like the cloud, this is a necessity now. Customers are demanding that experience. It's no longer good to do, right? So, these are the trends we kind of picked up as our definition of the new culture of credit. And what we saw, and this is very well articulated by the panel, in the last half an hour. These 3 things are what will define your credit offerings. So BNPL is a part of that, right? You need to have a solid back office, right? By solid, I mean, it needs to be agile, it needs to be secure, it needs to come with all the microservices, APIs, right? And has to be on the cloud, right? The second one, and this is where it gets more interesting, it needs to be interacting with the ecosystem. And that's where Sebastian referred to all the partners that form a chain, as part of the ecosystem. I, in fact, would go a step further. It's not only the ecosystem, it's a connected ecosystem, right? So you need to have a very well-established connection with the disparate players that are there, both externally as well as internal to the ecosystem, as well as within your internal systems. So, it's not only lending. That's point number 1. Point number 2 is you have to, as part of the ecosystem, have a seamless connection with all the different players. Now, these 1 and 2, they actually lead to number 3, which is providing a superior user experience, right? So because of the fact that you have a solid back office, and because of the fact that you are leveraging or harnessing the ecosystem, then and only then you'll be able to come up with a superior user experience, right? Whether in terms of customer journeys, whether they're integrated or not, or in terms of the platform that is offering those journeys, right? So are they seamless? Are they integrated? And are they good enough to attract the customer, right? And therefore, with these kind of tech platforms, you can have banks that can. So point number 1, in terms of the back office, the building blocks. So what exactly are the building blocks that we are talking about? So we discussed APIs. We'll move a step beyond that, right? We call it packaged business capabilities, PBCs, right? I mean, which basically will be, will be all your well-defined business capabilities, which are wired together by APIs, right? With its own data and no external dependency, right? And I'll give you an example, the way we at Intellect have envisaged those PBCs as part of the overall credit system, right? We believe that a comprehensive credit system needs to have these PBCs at their disposal, right? in terms of whether it is the channel-based PBCs that we're talking of, the back office ones, or even at the partner end, right? And along with that, the common capabilities. Just a very small example. You would have PBCs like trade decisioning, both from a retail perspective as well as from a commercial, right? And this is where here I would want to venture forth and say, I'm not talking of a point solution here. I'm not even talking of banks going for a separate point solution, right? It will make a lot more sense to go for a comprehensive credit platform which can curate those point solutions like BNPL, right? And we'll see shortly how these PBCs can be curated to form a point solution like BNPL, right? So I'll move on. The second point, which we spoke about, the connecting to the credit ecosystem, right? I mean, so how do we do that? And what is our version of a connected ecosystem? So from a bank's perspective, what we are talking of is an array of channels that are available from which we can onboard various products, right? What all are the credit products that we need to onboard to have this credit platform, right? Which is what is reflecting in this layer. The third one is the entire life cycle of the lending stream or the credit stream, right? Where starting from origination to all the way to debt management and also offering merchant services, right? Moving on to what I call as the external ecosystem, right? These are and the reason it is good to have these external partners with you is because it's not feasible for the banks to kind of do everything on their own, right? You need external partners to kind of enable them for you, right? And it's easier. They already have set processes. If you have well-defined APIs, you can actually do a seamless interface and onboard them, right? And finally, what are the enterprise services you have as part of your internal products? So can you leverage them to kind of offer a comprehensive credit solution, right? And what we believe is that all these different the plays or the points that you see over here need to be converging with one another onto the same platform, right? So therefore, we have a convergence. We see a convergence of what we call as the relationship engagement. That means the platform needs to talk to any of these relationship entities, irrespective of their form factor. Moving into credit products, therefore, any credit product that you want to offer, whether it is like I was giving that example, if you want to have a BNPL solution, should it be on the card or should it be off the card? If it is on the card, do you onboard a new player? Doesn't make sense, right? Can the same platform offer everything, right? Moving on to convergence of credit lifecycle, right? Moving on to convergence of ecosystem, enterprise services, and very importantly, have a connection, right? So which is a very intelligent, you have a ESB layer plus an SDK combined, right? I mean, do you have that connected ecosystem that with all the other 5 pieces that we kind of spoke about? And finally, putting it on the cloud, right? I mean, is it available on the cloud, giving you scale, giving you cost benefits, giving you more security, and speed to market, right? So all this together, so convergence, connection, and cloud, right? We refer to it as a 3C, right? And so this is important from our perspective. Moving on to the user experience, right? And this is where I use the word curation, right? So in terms of curation from a credit perspective, from BNPL to retail lending, whether you want to do it end-to-end, to segment specific in terms of healthcare, etc., factoring, all these different pieces, can you curate it by using the PBCs that we spoke about? And let's see as an example, right? Now, if I were to take a scenario, first scenario, which is buy now, pay later, and how do I curate this? So the way we kind of envisage this is, if I use the customer self-service app from the channel side, back office functions, which are largely retail in nature, using cards as well as non-card functions, in terms of collections, in terms of delinquency handling. Moving on to what can be partner fulfilled, whether it's portfolio analytics, campaign management, etc., to all the common capabilities like, let's say, GL, right? So all this comprehensively right? You can pick and choose the PBCs that you want to use here and inform that solution which you can use for BNPL. Now let's see a slightly different example, which is on the other side of the BNPL. We spoke about merchant or rather inventory finance, right? If I were to do it for inventory finance, right, the core structure remains the same. I'm choosing a different set of PBCs for that, right? From the same credit platform, choosing PBCs which are more attuned towards inventory finance. The pick and choose, now it becomes commercial in nature. Your policy checks and scoring will differ as per the segment that you're going after, right? And therefore curating the other scenario, the second scenario, which is on inventory finance, right? Now, this is where we and all these PBCs, the platform that we're talking, the credit platform that we're talking of, we at Intellect, we have kind of harnessed our 35 years of having done credit across the globe to kind of pick and choose the domain depth that we wanted to bring in, right? So therefore, good amount of experience with domain knowledge, along with state-of-the-art technology, right? As well as an architecture platform that is agile and secure in nature, right? So with that, I bring the concept of, and this is something that we launched for Europe, recently, called iKredit 360, right? And this is where we're calling this trade platform as iKredit 360 for the European market. Obviously, we are also offering it to other parts of the globe. But in Europe, we've had some early success there. We are already implementing this for 3 of our clients there, right? So therefore, our first launch happened to be in Europe, right? And I'll try and show you, a real life case study, like for a leading bank in Europe, for example. What exactly have we done out of this platform? So I mentioned the channels. These are the channels we are using there. These are the products that we are using. So this also includes, if you see number 8, that's the BNPL. The BNPL solution is coming out of this. But apart from that, we're also doing vehicle loans, we're doing Insta credit, we're doing housing loans from the same platform, right? Moving on to the credit lifecycle and the external and the internal connections that we want, right? So putting it all together, you curate it as a solution we are offering to the bank, and this is what what we have implemented for that bank, right? So just to sum up, iKredit 360, right? We are talking of curating integrated credit experiences. We are targeting new customers, new customer segments via this platform, launching innovative credit products, as well as eliminating any of the inefficiencies that are there existing in the credit system, right? Like I mentioned, a good amount of domain knowledge has gone into this platform. And finally, I'll just leave this presentation with who we are. 35 years, in BFSI, and with some 260 plus customers in 97 odd countries, right, across the globe. And this is, this is Intellect, and welcome you to, the Intellect experience. With that, I'll hand you back to Ram. Thank you.
Thank you, Harpreet. Intellect Design for Digital. Interesting to see that presentation there. Before we close out, and open up for audience questions, maybe it's time for a quick poll, which I think is important in the context of your presentation. And I do want to hear from the people in the audience there on what they believe is the most important factor driving adoption of BNPL. Is it the flexibility in payments? Is it the lower rates, interest rates compared to other instruments such as cards? Is it the additional credit on demand features, or is it easy access that we now see for the quote unquote underbanked population? The poll, you can see my screen. Can you?
Yeah.
Yeah. Okay. We're waiting for people to poll. I don't see them getting polled. For some reason, there seems to be a glitch. I can't see the polls actually getting registered.
It was the message, but the poll was finished.
I guess it's, because we chose question 3 before 2. Okay, let me abort this, and maybe there's no doubt for questions. So I'm going to jump into the question that we have from the audience there. And I guess I'll start with a very interesting question from Govind. And I guess maybe this is to you, Sebastian, and how reliable do you believe is alternative data, be it from telcos or handsets and bank and transactions and payments in the credit decisioning so far in the BNPL space? And is there enough confidence that using it could actually be used in conjunction with, that is confidence to use it alone, or do you think it has to be used in conjunction with credit bureau and other traditional data? Sebastian. You're on mute, sorry.
Sorry, I didn't want to interrupt in Harpreet's superb presentation. I think that main thing, I think that all data that you can get a hold of, I think that is of high importance. I think the most important thing is that you make a judgment over the data that you can receive. And what we are doing, connected a little bit to what Harpreet explained, we are creating scorecards and also what we call creditworthiness assessments on all the customers that are creating initiatives together with us. And we are, of course, using external data from different perspectives. And I think that, yes, it's good. I think you should challenge the cleanness of the data. You should try to put that in the risk model to find out how it could be useful, because we as people, we could interact differently because we think that different type of engagement are important in different ways. So what we have created is some kind of scoring model, and where we say that depending on what type of data you have, it has bigger or smaller impact on the totally risk assessment that we're doing on the customer. And so yes, absolutely, especially if I read the question correct from, for example, the telco or let's say telco, and also from other initiatives. Well, we have a very sharp rule saying if you miss down payment somehow, no matter where you do it, you automatically get a score of 4, 5, 6, 7. And then when adding other data to that, not only from financial instruments, we are creating the creditworthiness assessment for each of the customer. And that is, of course, what we would like to do on the fly online much faster than we can do today, which means it speeds up the process. And then suddenly we become we will challenge the traditional way of, for example, credit cards. And I think that the user experience of sharing, don't forget about the open banking data. That is also very important, and can be gathered not only from different banks but also from other different instruments. So the question is yes, and I explained a little bit how we are doing it.
So the more the merrier, essentially, right? I mean,
exactly. As long as you cleanse the data and that you have a risk assessment or a risk matrix over the data. So don't let data wrong data get too big impact. But yes, it's important to gather data from all different places.
We've run out of time, but I do want to actually maybe close this discussion with one last question, and this is from Arjun Batra, and maybe Tomasz, you could help us with this. On what role will low-code approach play in the rapid deployment of BNPL platforms and democratization of the software development process itself?
The different companies can choose the different way how they want to do it. But first of all, before you choose the low-code platform is good for you or not, I think that you put another question to start with the BNPL or this type of the activities. Please think about your solution as you would like to do it as a service. Even you are doing for yourself, is the best to accommodate the changing situation, that you do it as a service for the future, like BNPL as a service. And having this in your blood, let's say, this kind of the approach, you will find if the low-code based, say, platform are good for you or not, because this is the way how we want to go further. And this is to give you the possibility that you can do it something very fast, but at the same time, you will know that some pieces of your puzzles can be exchanged later on to another way. So that's what mentioned by Harpreet, that it's important to be sure that all these modules are connected properly and in the way how they want to do it. Of course, it's good to have it, this kind of the approach, but it can be different for the different players.
So it's not necessarily one model. The answer to Arjun's question is yes, it would play a role, but it is not necessarily the only approach. Yeah,
That's right.
Excellent. Gentlemen, I am afraid, as they say, all good things need to come to an end, and we will have to draw the curtains here. We are way beyond our scheduled timeline. So if I may take the opportunity to thank Sebastian, Tomasz, Harpreet, once again, a fantastic conversation, very insightful. I'm sure a lot of our audience out there have taken away a lot of very interesting insights from this discussion. For those who could not get your questions answered, please feel free to write to us. We would do our best to actually go back to the panelists and get their views, which we could share. Thank you once again, for joining us today, and wish everybody a very, very good rest of the day. Yeah. Have a good evening. Take care.